us now, Managing Director of AlfAccurate Advisors. Rajesh, good afternoon. Thanks a lot for joining us.
Hi, good afternoon.
So, Rajesh, you have a very interesting market portfolio strategy: market size, market share, and margins of safety. First, let's understand that, and then we'll discuss some of the sectors and stocks.
Well, Anuj, I think it's very simple approach, easy to implement, simple to understand. First, market size is nothing but size of opportunity. So when you identify any company, we look at the company which is a sector, which is a huge in terms of this market size. So that if you go right on promoter on business model, then there is exponential returns what you can make out of it. But it's a second M which is the most critical, and that's a market share. Now let me little bit explain this. So we buy the companies which are into the sectors where there are only limited number of players. So if you identify the sectors with a limited number of players and then you buy the leading company within that, now you cannot time probably the economic cycle, you may not able to time the business cycle, but if you buy the leaders, then their ability to navigate the upturns and downturns of the economy much better compared to any other peer group. Now say for example, you are talking about real estate sector. Now in this sector, it is going through a very painful time in last 6 years. But if you have bought leader, then you have withheld, there was no major damage to your capital. And at the same time, when the industry revives, you make a handsome profit. And last time is nothing but the margin of safety, which is nothing but the valuations, which one can look at from the different parameters, whether it's the price to earning or price to book or ROE or earnings growth. So that's a very simple philosophy what we follow.
Okay, fair enough. Rajesh, good to have you on the show. Today we do want to get your specific take on IT because it's an absolute riot in the market. These companies have started coming out with great numbers for the first quarter and the market can't get enough. What's your view on the sector?
Well, I think this sector will continue to, what I would say, get good demand traction because globally people are moving towards more digital. If you look at even Infosys results or L&T technology results or Mindtree results, digital segment is growing, rapidly compared to the traditional segment. So I think the sector is going to do reasonably well. These are the strong companies. The only thing what we keep asking to ourselves is that do we have a other better opportunity? Because economy is at the cusp of recovery and we are at the inflection point. So it is possible when you look at over 2 years, probably there are many other sectors and many other companies which will probably outperform in terms of earnings growth compared to say IT companies earnings growth. Because IT companies earnings growth can be 15 to 22%, but there are maybe many other companies in other segment where earnings growth can be significantly superior. So that's a view what we have on IT. We are what I would say neutral compared to other sectors where we are probably more bullish.
Okay, any new theme that you have identified or you have added to your portfolio? If you could name the stocks, nothing like it.
Well, I think the theme from last 12 months, what you have been identified are 3 themes. First, acceleration of formalization. Second, China plus one. And third is nothing but automation and innovation. And each of these themes, which we have identified last 12 months, is further playing out, both in terms of earnings growth as well as the stock price returns. So for example, formalization, and you are talking about any names what we might have added. So building material is one segment which we talked about last time. We have been extremely bullish on this space. We are holding number of companies in this like Polycab, Century Plywood, APL Apollo, and we keep looking into this space. It's a very, very interesting space. It is also proxy for the real estate sector, which also we believe probably the worst time is over. Second is China plus one. We have been very bullish on specialty chemicals from last 2.5, 3 years. We are further adding to this space. We are also adding to the electronic space. And there are another very, what I would say, bottom-up opportunities which are coming up in China plus one strategy. And last but not least is automation. And this includes the industrial capex plays. Companies like, for example, ABB, which we have added some time back, also 3M, Honeywell, and few very, very unique companies which are going to gain significant momentum because everyone is moving towards automation. So if you look at, for example, very recently, ABB has announced that they have done the automation for one of the largest steel company for the first time in the world. It is for the Indian company they have done it. And it's a very interesting case study. So I think many more such examples are going to come over a period of time. And I think this space is going to revive significantly.
Okay. Rajesh, on your point on specialty chemicals, let me just dig a little deeper. The China plus one strategy, of course, is well documented. Now, what part of it is offering the greatest opportunity? Is it pigments and dyes? Would it be pharma intermediaries? Would it be agrochemicals? What are you most bullish on?
So, Shubhi, this is a very interesting question. This specialty chemical is a segment where there are so many components. So while there are umbrellas, like for example, you mentioned about agrochemical. So there are different chemistry. So say for example, fluorine-based chemistry. So where we are holding, SRF and Navin fluorine. So likewise, we have identified the different chemistries. Like for example, ketamine is a different chemistry. And for every component, there are few niche players. So what you need to do in this segment is that, number one, we need to check whether the company has the right environmental pollution norms compliant plants. That is something which is very, very critical. Because there are many companies with hefty margins, but probably their compliance is not equivalent to world standards. And therefore, they may face problems in future. So that's the first important criteria. Second important criteria is that what kind of capital expenditure you have done or what kind of infrastructure you have to expand your capacities. Because world is looking at India. You need to have the right infrastructure in place. Third important thing is how much of your revenue is coming directly selling to the global players, not through your own distribution channel, but directly B2B. For example, one of our portfolio company is supplying to Sumitomo's of the Japan. Now that is it means it is a much more creditable business, correct? And of course, last but not least is, you keep checking the earnings growth. So it is a bottom-up approach because if you look at top-down, you may get confused because there are a number of companies and number of chemistries. Once you identify, yes, it is a China plus one good traction, then we do bottom-up analysis and based on that, we identify companies in this space.
Okay, by the way, just about preparing for 3 p.m. move, the market's cooled off a bit actually. It looked like that move which was happening towards 16,000 will have to wait for a bit. And the reason for that is the bank nifty has cooled off quite significantly from the highest point. No cooling off in real estate. I spoke about Prestige and Sobha. Look at the bigger ones as well. DLF and Godrej Properties, both these stocks at the high point of their day. Now, real estate is making a big comeback. Rajesh, are you buying any stock here?
Well, we are rightly positioned. In fact, we have been positive on this space from last, I would say, 2 through 3 quarters. And we are playing it through proxy way. So we are buying the consumer franchises, which are going to get very big beneficiary of the improvement in the real estate space. So for example, plywood, wires and cables, pipe segment, and likewise, there are many other companies which we have in our portfolio. Few names I